Good morning, everyone. Tony Mello Properties team. Hope you're doing well. Sunday morning, a little foggy headed, but I'm going through a program, watching a video, training video for a program called HomeFundit. It's intended to help people collect money so that they can use for down payment and closing costs. It's a older program. I've known about it for now a couple of years. Um, so I've gone through basically all of it. There's a few new things that I didn't know before, which is why we do these videos every once in a while to kind of stay fresh on that. So for the folks out there that don't know, we bought a two-family and we're in the middle of trying to find renters that need to rent because they have no other option at the moment. They need a little help to get to the point where they can buy. So we're looking for folks to come with us, stay with us, rent from us while we get them to the point where they can buy and then use us as the buyer broker to go and buy a home. So it's the whole reason why I'm kind of revisiting some of this stuff. There is an active portal which I can get you the link. It is that homefundit.com/realtor/Tony Mello. By coming here, you'll have access to this portal and everything that HomeFundit has that you can use to start saving money. By clicking on this Start at HomeFundit, go through that process. We donate a certain portion of money, and then all the benefits, modules of what you can do and how you can do it to save money. So I was and still am in the middle of kind of going through all of this.
If you can move people from the left side of the picture to the right side of the picture, your business is going to grow. So how do you help people get a bigger down payment? Well, today,
The entire thing is focused on how to help people to save more money to be able to be used as the down payment for closing costs, and I think pretty much anything else that is housing related.
short of getting a raise from your boss or doing something illegal or winning the lottery, it's down payment gifting. And in about 25% of cases, we see help coming in from good old bank of mom and dad. Even though under Fannie, Freddie, FHA guidelines, other relatives can help with the down payment. They never get asked, and there's a very good reason for that. We kind of know what that is, right? It's kind of a pain.
Right. It's a pain at the point where you're trying to buy a house, and now at that point you're going to the relatives. It can be done. It happens. We've seen it many times, and we've helped people do it. But it is difficult because there's a lot of gift letters and paperwork and sourcing rules, and it's inconvenient. It's not easy to do it at that point in time. So it's better to do that kind of stuff ahead of time so that you've got time to let funds season. They know where the money came from. They know, especially in a program like this where it's specifically intended for that, where the money came in ahead of time from different people, different sources, and there's less questioning and headaches at the time that you're trying to buy a home. So trying to do it, going through the stress of buying the house and then trying to fund that money at that time is a difficult thing at a period of time where you don't need more difficult things. So setting up this process ahead of time, saving those funds ahead of time, if you can, that is definitely the better way to
Right?
go.
You got to go chase paper checks. You got to get grandma to sign a gift letter. I'm not really interested in having her supply those bank statements, so I'm just going to leave that one out. There's sourcing rules about who's a relative and who's not a relative. The buyer doesn't know any of that stuff until they talk to a loan officer who explains the rules of down payment gifting. At that point, it's pretty late to go back to all those other relatives and get some help, right? So that's why we see help coming in, one check from mom and dad in a lot of cases. And so down payment gifting, while there's some promise there, it under delivers versus its potential. We took a look at that and we said, hey, let's fix this. Let's make it so that anybody can give online. And we opened up the field so that people can donate online with a debit card or credit card, no offline paperwork. In fact, we make it so that anyone, that means non-relatives, can help with the down payment. Up to 5,000 per donor, no maximum on how much you can raise.
So now I'll have to ask about this a little bit. It says except the borrower, the person borrowing, the loan officer, and the agent. but there is a section in our where we actually do provide a certain amount of money. We match. If you go to my portal, Tony Mello assists customers using HomeFundit to raise their down payments by pledging $1 for every dollar crowdfunded up to $500. So it definitely is set up so that I can pledge a certain amount. That'll be an amount that is taken at the closing and credited to the buyer, to our client. In addition to that, we are also, again, for the folks that haven't seen this yet, with this rental, what we are doing, the rent is a certain amount of money, and from that certain amount of money, we are gifting $100 for each rental payment given for every single month. So across the board, no matter who it is and what apartment it is, if we stick to that flat fee of $100, it's $1,200 for the year, 12 months of payments. Or if you stay for 2 years, it's twice that. So with this rental, we're trying to stick to the 1 year, 2 years, if we have to, 2 year max, so that we can help people. We should be able to help people, I'm hoping, to go from the rental status all the way to a buying status within that year, max again 2 years. If we get to the 2 year mark and we haven't gotten to the point where we can get to that point of the renter turned buyer being able to rent, we have to kind of step back, look at the overall picture, find out what's going on, and kind of rethink that. The idea with our rental is that we want to be able to help as many people as possible, and we can only do that if we can filter people, push people through the program as quickly as possible. If we have a renter that stays in for 20 years, that defeats the whole process because we're only helping one person versus 10, 20, 30, 50, 100, 1,000 people. So we'll see how it goes, but right now that is the program. I can add more information on that particular building. It's a two-family in Taunton that we're renting out with the idea of turning renter into buyer, and we are pledging, in addition to that, pledging $100 for every rental payment. So whatever that rent is, if you subtract 100, that really is your true rent, because as you send in the money, we're going to send the money over to HomeFundit, where it stays there, and it is technically your money.
On the campaign, you can keep going. 5,000 from mom, 5,000 from dad, 5,000 from grandma, etc. No commissions, no hidden costs. 100% of the money goes through to the transaction. If you try to do this on Kickstarter, GoFundMe, any of the other platforms out there where you can do crowdfunding, you would have big problems at the end, and you'd have huge fees along the way that would use up some of those funds. And a big one, there are no time limits on a HomeFundit campaign.
Okay, so that's important, because the folks that we're likely going to be renting to are going to need a little bit of time. It won't be a 6 month thing. It may be a 1 year thing where we're trying to help them side by side with a lender to fix their credit and put money down. Those are the two real big things: is what is your credit? They need that, the loan officers. That needs to be a certain amount, and the better your credits, the better your interest rates, or the better the higher we can get that number, the better it is for you. But we need to get you out of the high 500s, low 600s into the 660, 680, 700 would be nice range. And that is the credit score that they pull. So I'm not going to get into the credit score stuff. There's different versions, and the only version in the case of buying a home is the one that the lenders use. There are some rumblings in the industry about, we used to be using or still are using the classical model of the credit scoring system. Some recent changes that now we're kind of moving into, and it's new, so no one is really accustomed to it yet. The Vantage 4 credit models, which allow you to use rental payments to help you improve your credit. So that's an excellent thing that happened recently. If we can fold that into some of the stuff that's happening with the new folks with this new program with the renters, residents that are in the program moving forward. That obviously that's a good thing. Anything that we can use as a tool to improve your credit as fast as possible, that's a good thing. So we'll go more into detail on that. And again, it's so new that we're still trying to figure out the details with the loan officer that we're using with this HomeFundit program to see what's coming, is it ready, how do we use it, and move that forward.
Okay, and that's important to understand. No time limits. That means you can start these as early as you want. You do not need to be 18. You do not need to have a loan file open. You do not need to have good credit. I like to say all you need is a computer and want to buy a house.
I was just talking to my kids, and they're 11, both of them. We may start two right now for both kids. One to kind of get accustomed to the process of this, and two, just start putting money down together for them so that when they get to the point where they are 18, 19, 20, 21, 22, and they're ready to start thinking about buying a house, this may give them a severe advantage because they're starting so early to get to that point where they'll have that money ready to go where they can buy a house.
You set up one of these HomeFundit campaigns and away you go. So a lot of people say, seriously, you mean you don't have to be 18 to do one of these? No, you do have to be 18 to do a loan application. But to start putting together down payment funds,
An account.
that's up to you. You can be 16, 14, whatever. And we have a lot of very young folks who are working away on that future home down payment. And it works with any loan program except for HFA and bond programs. That means all of your conventional, Home Possible and Home Ready, 3% down payment programs, FHA, VA, USDA, Jumbo, all in one, non-QM, renovation. So it plays well with just about any loan program except for state HFA and bond programs. Boil this thing down to an elevator pitch. This is the thing to remember. We've got online down payment gifting where anyone can give. We've taken the friction out of the process, moved it online, and we've opened up the playing field so your buyer no longer has to worry about who can come and help them with that down payment. Sets up very, very easily. They just go through a few simple setup screens, and presto, they've got a page on the web where their family and their friends can help with their down payment. Pages look like everything.
And again, that right there, if you go to my portal, homefundit.com/realtor/Tony Mello, you land on this page by clicking on this green button. You're now at that point where it's showing that on that video.
Family, friends, dogs, cats, graduations, weddings, you name it. We've seen it all. They can customize that picture, the story on their campaign. There's a place for the loan officer and real estate agent on the bottom left. Upper right-hand corner is where people donate to the campaign. There is a second way to add funds to a campaign. It's called a bit. I bet you can tell what that's about.
I'm sure he's going to explain that, and that basically is if you're going to go to Petco to buy pet food anyways, you might as well be going through the portal to buy that pet food, and a portion, each one of these companies gives back a certain amount of money. You're not paying more for that product, you're paying the same amount that you would have paid if not going through the portal, but they're pledging now a certain amount of money. So you're actually, if you went and bought pet food, dog food for $10, and that's what you've been doing that every single week or every single month for your pet, they'll give you a percentage of that $10 that you would have been normally paid anyways to this account. So in essence, you're really paying less for the dog food than you have been before because you're getting a portion of that money back and you're using it to help your sponsor, the person that you're trying to help. All of these pay a different percentage. The one that sticks to my mind that caught my eye a year, 2 years, 3 years ago when I was going through this and kind of reviewing the entire thing was Home Depot. I'm not sure if they're still paying the same percentage or not, but at that time at least they were paying 5%. So no matter what you bought at Home Depot, as long as you did it through the portal, and I just learned today that you don't have to go through the portal. There's a Chrome extension, so now you can just go straight to Home Depot and it connects through that extension. So when you go to homedepot.com, it now applies and connects to all that. So whatever you're buying here online, it's throwing that money aside. You're basically getting everything cheaper, or you're paying the same amount of money, but a portion of that money that you would have paid no matter what is now going to your friend, to your family, to your son, to your daughter, with this up it. So you're leveraging corporate sponsors, if you want to call it that, and they're gifting back a percentage of the money that you would have already that you would have spent no matter what.
And in the bottom right, you can see where all the gifts are coming in. We match those gifts 2 to 1, up to the lesser of 2,000 or 1% of purchase price. Most homes are 200,000 and above, so most people are hitting that 2,000 really easily. Sometimes the 1% rule kicks in. If you're buying a $180,000 house, you got an $1,800 match, but the match is generally 2 to 1 up to 2,000.
Again, with us, we're gifting a 1 to 1 up to the 500 as the real estate broker. But we're also, in addition to that, gifting $100 of every rental payment. So, like I said before, if you're there for a full year, 12 months, that's 1,200, $100 for each month. If you're there for the 2 year max, and again, hopefully we don't get that far out. We want to do things quicker, but if you are, it's twice that amount. It's 2,400. So 2,400 plus the 500, we should be within that 5,000 contribution max. So we should have no problems with getting that money into the account. Maybe we'll even consider it as two separate things. Tony Mello, the real estate broker, Tony Mello, the landlord, if you want to call it that, property owner, on two separate. We'll see how that goes, but the idea is $100 for every rental payment into the HomeFundit, and then the 500 at the closing as the real estate broker. Try to get those monies into that account so that we can help with the down payment and closing costs.
We apply that as a lender credit at closing because we're the lender. So you have a big bucket for your gift funds, and at closing you have 2,000 lender credit. And there's 2 requirements to use HomeFundit. These are very important to remember. Number 1, the most important one, you have to do homebuyer ed prior to signing a purchase contract.
All right. So for the folks that are starting with this, rent with us while we help you get to the position where you can buy a home and then buy a home program, rent to own program with this particular 2-family in Taunton. We're not going to get you into the home buyer ed course immediately. We will get you into HomeFundit immediately so you can start putting all that together. But we're not going to tie you into the home buyer education immediately because there is I don't think it's in here. I think he says it in a few seconds. A 1 year expiration. So if you started immediately, we go a full year. By the time we get to the point where we're showing you homes, getting you to a purchase and sales contract, that's going to expire and you have to do it again. So as we get closer, as you get a pre-approval in Ray Severance, which is the lender that we're using at home, CMG, says we're going to give them a pre-approval. At this point, you can start showing them houses. We're going to get to that point where we can get closer and closer to a purchase and sales agreement. At that point in time, then it makes sense to go through the home buyer education because we're now pretty much through the rental phase. We've fixed everything that we needed. We got you a pre-approval. We have money down. The credit is better, hopefully as much as possible. The higher we can get, again, the better. So yeah, at that point, we have a pre-approval. We'll do the home buyer education and then jump over that line where we can start looking at houses and get a purchase and sales contract together and start moving towards buying that house.
Right. Not just homebuyer ed, but homebuyer ed prior to signing a purchase contract.
Right.
That's a big one. And it is a
At
do
the
not
end of the
pass
rental,
go, do not collect 2,000 rule.
we think.
So make sure that when your buyer sets up a home funding campaign, you're on it. Get that home buyer ed done and make sure they understand, because a lot of times
He's saying that because in the case that he's thinking of, about 6 months from the start of the HomeFundit to the point where people are buying a home, it's taken them on average about 6 months. So in that case with him, doing that home buyer education makes sense because by the time they get ready within that 6 months, they take the home buyer education at the beginning. They still have another extra 6 months before they actually can buy a house or that the home buyer education expires. So there's plenty of time in that case. With us, unless I mean, unless Ray, at the beginning of the process, says, Tony, these people can rent with you, but they don't need that full year. They definitely don't need the full 2 years. We can get these folks up and running in 6 months. Then that puts us in line with that. And yes, at that point in time, as long as you want to do that, you want to buy as fast as possible, we are absolutely okay with that. Then at that point in time, if the timeline to get ready is 6 months, not a year or 2 years, then we should start the home buyer program, home buyer education at the beginning, at the time that we set up HomeFundit, do all that stuff because we see that horizon, that timeline where all that happens. We can figure that out once we get your application to Ray, and our rental write-up has Ray's loan application right in it. So when you start the rental, your application's not actually for the rental. It's actually the beginning process is Ray's application, so that he can look at it and say, all right, credit is here. They roughly have this much amount of money, some money, no money, we don't know. Um, so he gets a basis of where we stand and what we need to do to get you to the point where we need to get to. So if that stretch is 6 months, that's great. We'll work appropriately according to that. If it's a year, we'll work according to that. Year and a half, hopefully not 2 years again. But we'll figure out those details and then set up a timeline of what needs to happen and when, based on that application that comes in and what Ray sees for the things that he needs to see to be able to put together a plan on how's this going to go. What do we need to do now to keep it on track? To
I
get
hear
the
loan officers say, "Oh yeah, you got to do home buyer ed," and the buyer has no idea when that needs to happen. They get
well,
out there and they do a contract, and then they come and they say, "What was the last thing you said?" And it's too late, and they just lost 2,000.
definitely not going to do that with you. I'm going to figure out what we need to do. We're going to have those discussions on the front end to make sure that we know, at least the best we can, how it may possibly go in your particular case, and then we'll put the things into action at the appropriate time to make sure that when we get to the end, we're maximizing the amount of money that we can draw out of the program.
Dollars, and there's wailing and gnashing of teeth, and it's really not fun. So please do not miss this one. I will say it a few times today. It's the one thing that will trip you up. So prior to signing a purchase contract. Free 1 hour over the phone based system. You can get to it right from your campaign dashboard. It's with GreenPath. Couldn't be easier. So get it done. It's really important. They can also use a HUD approved online course like Framework or Fannie or Freddie's course, both of which are fine. But make sure they get it done before contract. Super important. The day you set up the campaign. Usually those things are good for 12 months. And
12
also to
months.
get the lender credit, the 2,000, you do have to be a first-time buyer. We use the one borrower rule, which just means that only one person has to be a first-time buyer, and you have a 3-year Fannie Mae rule there, which says can't have owned a home in the last 3 years. Now we do see move-up buyers using the platform occasionally. They don't get the 2,000, but they can use the platform to collect funds from family and friends. Usually those are the divorce and disaster category, I like to say. We've had some good wildfire campaigns here in California where I am for move-up buyers. So just kind of depends. But the vast majority of the folks that you're going to see using HomeFundit are first-time buyers who are leaning on family and friends to help with that down payment. Make sure that you stack other grants with HomeFundit when you can. We have the exclusive ability to go beyond the 2,000 just from HomeFundit. If you've got a buyer who's making between 50 and 80% of the area median income, you want to check into Borrow Smart from Freddie Mac.
So obviously we want to stack as many things as we can, and that's folks usually think of the first-time home buyer programs that have additional grants and monies that you can go and get, especially if you take these educational courses. Then you can grab certain chunks of money from certain places, especially if those grants, if those monies are available. I'll leave this stuff to Ray, educating myself on it, on what's out there and what's possible, so that I can remind people, oh, what about that? Or what about this? Does this make sense? Does that make sense? We want to try to grab as much as possible, but Ray is the guy that will be able to look at your loan application and then pick out, because he'll know how much money you're making, what areas can do what. Some of this stuff is only available in certain areas, gateway cities and things like that. So we're going to try to pick out the plan that best matches your particular scenario and try to maximize the funds that we can go find and use to put into this program.
That uses the 3% down payment program, Home Possible, and you can get
Home
1250
possible.
extra if you're in that 50 to 80% tier. And if you're in the below 50% tier on income, both Fannie and Freddie have income-based grants of $2,500 using Home Possible and Home Ready. And again, you can stack those with HomeFundit. So there's $4,500 there. And if you are in one of the majority minority census tracts, providing in one of the majority minority census tracts in the 18 states where we offer Community One, there's $6,000 towards the purchase there. It's a 2% grant up to $6,000. And that means the remaining 1%, it uses Home Possible and Home Ready, the remaining 1% can be crowdfunded with HomeFundit, which means
So this was new to me. Every time we watch these videos, there's always additions, things that get added on that I hadn't seen in the previous videos that I had seen. So I did go find this CMG home Community One, and I've got to read through this to figure out um, what it entails, what's inside of it, who qualifies, who doesn't qualify, how does it work. And I'll read that, and I see immediately that it says Massachusetts is part of that. So anybody buying a property right now, as far as I can see, I've got to read this a little bit more, how to apply. I'll find out more about this because that is at the right side of that chart, which means you're going to get the most amount of money um, if you are qualified for this particular program. I'm not going to read it in front of you right now, but I will read it so that I understand it the best possible, and then make sure if you're qualified, that you're definitely going to be getting that
your
money.
buyer doesn't have to bring any money in of their own. So it's a fantastic opportunity there.
No,
If you can
no down payment,
Community One, you
no
definitely want to
closing
use
costs,
that. It's a really powerful program if you're in one of those special
maybe.
locations. Okay, second way to add funds to a campaign, and we do that simply by shopping. We work with about 1,000 online retailers. Each one of them rebates a certain percentage of what got spent online back to the down payment as a pledge at closing. Anybody can shop. That includes you guys. We work through a nonprofit on this, and that means anybody can help with the down payment by shopping. We work with everybody, all the travel guys, all the retailers, Home Depot, 8% back, Walmart's in there, Target's in there, CVS, Overstock, you name it, everybody's in there. We match those rebates 2 to 1, just like we match the gift money coming in 2 to 1 towards that $2,000 lender credit. So think of it as a second way to get to the $2,000 lender credit. And there's a cool little Chrome extension that you can have family and friends install so that if they forget to go to the
That's what I was talking about. The last time I had seen the video, this Chrome extension didn't exist, or at least they didn't show it in their videos. Um, so now you used to be able to have to go straight to the portal and buy everything through the portal, but now it looks as if with the extension, as long as it's active in your browser, you can go straight to the Home Depot, straight to the Target, straight to the whatever, and it connects so that whatever you're spending through those websites, you no longer have to go through the portal. It'll connect it, and the money will get pledged, um, ported into that account automatically, which is helpful because you don't have to shoot. I forgot about not going through the portal, and I went straight to the website, and now the money's not going to go over there. This way, it kind of connects those two things, and whether you go through the portal or don't go through the portal, it's working for you and the person that you're trying to help to put that money together. And again, it's not like they're gonna add. They're not gonna charge you more money to give you back money. It's the same amount of money that you would have spent anyways. It's just now a portion of that money that you would have spent anyways is going to the account of the person that you're trying to help.
that special link on the campaign page, they can go directly to the store like Home Depot, and it automatically connects the shopping trip to your campaign, so you never miss an opportunity to help somebody. I also tell people,
Pledge up to 8% of the purchase to Doug's new home. I'll have to check it. The last time I checked, it was 5%, so maybe now it's up to 8% that they'll give back to you. So it's basically like a Home Depot coupon. You're basically getting 8%. Not that that doesn't go to Home Depot, but it goes to not back to you, but to the person that you're trying to help.
well, if you have family and friends that are helping you out by shopping, make sure they install that Chrome extension. Third way
I'm
to
gonna
get to
do
the
it. I don't think I've
2,000
got it.
is by sharing your campaign on social. You can get $10 per person per platform per day anytime you share on Facebook, X, or LinkedIn. And if your friend comes over to your page, shares your page from their computer, they can generate an additional $10 there as well. So there's three ways to get to that $2,000 cap. You can do it 2-to-1 on gifting, 2-to-1 on shopping, $10 to share, all is adding up to 2,000 cap or 1%, depending on the purchase price. Now, when they set up their campaign, they get to a nice little dashboard, and this is the way they control their campaign. They can control pretty much everything on the campaign, the picture, the story. Loan officer and real estate are both featured. There's a nice little to-do list on there that walks them through all the things they have or haven't done on their campaign, including getting their home buyer get done. And I get that done before contract. They can even start a pre-qual here. So if they set up their campaign first, been running it for a while, and they're getting ready to do a loan, they can actually start the loan file right from here. If they already have a loan file, they can connect it from here. So it's a pretty cool way to control your campaign. Now, administrative note, there are two tracks to HomeFundit. One is the Freddie Mac track, the other is the non-Freddie Mac track. I'm going to do the non-Freddie Mac track here first. Seasonings required on the gift funds coming in on non-Freddie Mac loans. So set up your campaign, run as long as you want, of course. Fundraise as long as you want. Typically, that's 4 to 12.
Ray will tell us at the beginning which track we're going in, what type of loan for whatever reason we're going with, so that we know what the restrictions are with each particular one, limitations, so that we can position ourselves ahead of time so that we don't have problems later on.
People start talking to family and friends. The average duration, by the way, on a HomeFundit campaign is 6 months right now. So people are setting these up really early, pipelining customers as early as they possibly can. Oftentimes,
Again, for him, 6 months is really early. For us, it may be a year. If it turns out to be 6 months, based on the application that we do early on, all the better. You know what I mean? So again, for us to help as many people as possible, we need to be able to pump people in, pump people out. We picked the 1 year, 2 years because just intuitively that is the time frame that we think makes sense. But there is no limitation as far as sooner. You know what I mean? If we hit that 2 year mark, we're gonna start getting uncomfortable. We're gonna have to kind of sit down and look at what's stopping us from being successful. Um, but sooner, better.
that's way before they fill out a loan application. We see that all the time. The loan app comes in later. But they get them started really, really early now. Um, get your home buyer ed done before you go house hunting because you're likely to end up in a contract. You want to make sure that's done before contract. Because seasoning's required on the gift funds on non-Freddie deals, so this is Fannie Mae, FHA, VA, all the other stuff, you got to dump those funds into the bank account so that they can season for a couple.
Take money out of this CMG account, is how I'm reading this, and I'll ask Ray, and put it into your own account of which you don't touch that money. I'd almost recommend, and I'll ask around a little bit more, starting a new account. Just from my own past experience of buying houses, it's a lot easier if you've got an account that is just untouched. So if it needs to season for 2 months, start a new account. Money comes out of the CMG HomeFundit account, so you dump it into this new account so that you intend on not doing anything with it. Just sits there. No, you're not paying bills, you're not paying gas, you're not doing anything with specifically for this. Let it sit there for 2 months, and then the bank statements basically show no activity. It's just money that you're saving. I think that might be easier, and you're setting it up automatically that way.
full bank statements. And so that's really important. Two bank statements, clean. Sometimes on FHA, it's only one bank statement. Check with your underwriter. But generally, you want to get those funds in there so that they become buyer funds
Just do it for the 2 months, and everybody's happy that way.
in the bank account. And they're seasoned, they were closed, they're going to get their 2000, they're going to get their upper rebate, and they're done. Now, occasionally, you will look into a buyer who finds out about HomeFundit a little bit late. They don't have time to season those funds. What do? Well, you cannot use unseasoned funds in the transaction. It blows up the transaction because of sourcing on the underwriter side.
Some folks are able to set up this account and put money together very quickly. So it goes very quick between setting up the account, putting the money together, and then buying the house. In our case, I don't think it's going to happen that quickly, so it's not going to be that hectic. We're going to have some time. It's going to be stretched out a little bit more. So we'll stay focused in case it's something like that happens, but I don't think it's going to go down that fast. For example, there are folks that when they get married, they'll use a HomeFundit to, instead of getting a registry together, they'll just collect money. And between the point where they're getting married and they're buying a house can be pretty close together, and then in that case, this becomes a thing that you have to worry about. Other than that, I'm not sure of any other cases where that might be a scenario in this rent to own program that we're doing. Again, I see that 1 year being a pretty standard or perceivable way of it happening, conceivable way of it happening. Sooner, again, it's perfectly fine, but I don't think sooner is going to happen. We'll have time within that 1 year to do things slowly, logically, comfortably.
So what people do, leave the funds in their campaign. They say, I'm just not going to use these funds to buy the house. I'm going to use some other funds to buy the house. And then I'm just going to recharge my bank account after closing. They're going to dump the funds in after closing. They just leave them in their campaign. Don't get them mixed up in the transaction. They still get their $2,000 credit. They still get their upper funds. They did everything right. They just didn't use those gifted dollars to the transaction. They put them in afterwards.
Important thing here is the money that goes into this HomeFundit account is 100% yours. You can use it to buy the house or use it afterwards, whichever way you want. So it's not money that is being held hostage. It is like a bank account. I think it is exactly a bank account that they have put together for you with a user interface, internet, so where you can kind of see what's going on, who's donating what, to track what's coming in and plan out how you're going to buy the house. In this case, and again, I don't see us going through this, but if it does happen, you can buy the house without the funds and then use the funds afterwards for other things, furniture and things like that.
Use it for paint, carpet upgrades, recharge account, whatever it is. Most people are seasoning, but you don't have time. You can just leave them in a campaign until after. Just can't use non-seasoned funds, except with Freddie Mac. Any Freddie Mac conventional, home possible, and choice renovation, no seasonings required. We have a special agreement with them. Funds can come in. Make sure you get your home buyer rent done before you get into contract, and then you're just going to submit your loan application. Close. The gift funds are wired at closing. There is no ACH button on a Freddie Mac deal. Once you get a Freddie Mac underwrite, it goes away, and the gift funds are automatically wired at closing. So this is really the easiest way to do it. If you can swing it with Freddie, do it. Usually that's about 45% of the deals that we do are Freddie. The other maybe a third or 40% are FHA. So great way to go because it's just the easiest way to go. Program stats to date, we've closed about 2,700 of these. Average donations around.
All right, so I won't go into much more. I want to show that one little section of this training video that explains, what it is, how it works, some of what it is, and some of how it works. Again, in our case, we have bought the two-family. We have two apartments, a first floor and a second floor. First floor is a 3-bedroom. Second floor is a 2-bedroom. It is the same square footage, so it's a rectangular house. Square footage downstairs, square footage upstairs, same square footage, meaning the bedrooms downstairs are smaller, doable bedrooms, but they're smaller, so you can fit more people in the downstairs. Upstairs, the bedrooms are bigger, but obviously you can fit less people in each individual bedroom. We are doing open houses, have been doing open houses. People have been coming through. We are pushing it in two different ways. The rent with us while we help you to buy the house, which is what this is all about, and then just the straight rental. We do prefer to be doing this. Again, as real estate brokers, we want to be able to help as many people as possible, not just rent an apartment and keep people there forever, especially the ones that don't want to be renting. There's different mentalities there. If for the folks that like renting, want to rent, I guess that works fine. Very few that we've ever seen that way. Most people rent because they have to rent. They don't really like renting. They don't want to rent. They want to buy a house. So we've kind of flipped the script a little bit with this whole um, property owner kind of thing. Since we are real estate brokers in both Rhode Island and Massachusetts, we are reversing things where we want you to come in, we want to help you get ready to buy a house, and then we want to get you out of the house as well. So, different than what a normal property owner state of mind is. So yeah, so that's the basic idea of this HomeFundit. It is a way for you to save money. It is a way for other people around you, friends, family, even strangers, if you can find them, that can easily put money into an account to help you to be able to buy a house. With us, we have that $100 for each rental payment that you will pay us, and then the money will automatically jump out of our account to this HomeFundit account. 1 year, 12 months, 12 payments of 100, 1,200 will go into that account. 2 years, you double that, and then we'll throw in some extra money as the real estate broker at the closing, which was that $500 payment that you saw on that page. Um, Rent with us. We help you side by side from day one. We'll know more as the rental application gets processed. Ray will look at it and give us a kind of an idea of where we are and what we need to do, how far out we need to go to get us into a reasonable position to be able to buy, and then we can go from there. Tony Mello Properties team, 508-369-9755. Hope you're doing well. This is kind of a preview of a video that me and Ray are going to put together soon. We're going to kind of pick out the things that we want to pick out and do a new video, something more than just me and my morning shirt here, and kind of pick out the plan and kind of explain to you guys how it's all going to work so that we can advertise, fill out those 2 apartments, and who knows, maybe more. If this seems to be something that is going to work out well, it's going to help people and it's going to push them into a better position where they get out of what they don't want, the rental, and into a house, which is what they do want. If this works, then the family will continue to work towards adding more buildings to be used in this particular way. So it's a new program that we've developed that we're thinking of. We're going to move forward to try to see if we can take advantage of this HomeFundit and everything that comes with it, to be able to leverage it to help people get out of rent and into buy. So new video or better video coming soon. I just need a little bit of time with Ray to kind of brainstorm the key aspects of what we want to show and how we're going to show it, and push it forward from there. Tony Mello Properties team, 508-369-9755. We will be back. Thank you.